all right. Welcome back, guys. Ron here once again. November the 20th. What an exciting day today was. And where are we now is the question. Where are we going? What's happening next? Obviously you can look through the news, guys, and you're going to see supporting facts for both sides. You can go through articles, you can go through Reddit, you can go through Benzinga, TradingView, wherever you want. It doesn't matter. YouTube. Obviously, it's doom and gloom. Everybody's pointing that the oncoming market crash is obviously coming. It's coming in 2020 by no later than the end of the year of 2020. And I can't say I disagree, but in the meantime, we're obviously going to trade the markets with what the markets are giving us. So, in preparation for the days that follow, the immediate days, guys, because obviously the days that are coming in the future, for example, from here to April, I can tell you right now, we are long some VIX calls because we are expecting a turnaround. So, being that the VIX right now is at the floor, at the bottom, obviously you can see here, this is the VIX's floor. I mean, when was the last time it got below this and went to the 8 level? But even if it goes down to 8 level, I'll definitely be getting some more because the VIX likes to come down to these levels and then it likes to bounce, right? Come down to these levels and then it likes to bounce, come down to these levels, bounce. Now we're here and we have quite a couple of days here, about 14, 16, 17 days now or something like that, right? After it entered this zone, and now we're looking for it to start coming up out of this level. But why, Ron? Why are you expecting this? Well, okay, guys, yeah, all the other stuff that's going on as far as the markets, news with China, Trump, every time he tweets something or anything like that, sure, that's fine. It does support that stuff. But I'm looking for things that are immediately that can help me, that I can point to myself, right? So I'm going to go over here to the trade tab, and this is what I'm looking for, right? So I'm looking for things like this. I want to see an increase in volume on the call side. I want to see how soon those calls are coming in. So how soon is that volume coming in? And that today, I saw that happen on December the 18th strikes here. Let me see if I can adjust this here just to show volume. All right, so here we go, guys. So this is what I was looking at today. Thousands and thousands and thousands of contracts were being bought up today on the December strikes all the way up to the 25 strike. See, 52,000. This is all going in today, right? 52,000, 12,000. And some of these are probably spreads, being that they're pretty close to each other. For example, these 16, 15s. But these ones that stand out to me the most are the ones that don't seem to have matching strike numbers, right? So like if, this one has 52, but there is no 52 thousand anywhere else out here, for example, I'm not expecting that to be a spread. It could potentially be somebody putting in a lot of money because they're expecting something to happen. And go ahead and do the math, guys, and go ahead and go through the option time and sales so you can see when these were purchased and for how much, and then do the math so you can convert it and see how much money was actually put to work. So another thing I'm looking for is, okay, well, let me take a look at the S&P. What is the S&P doing? So again, same thing, time and sales. And now I'm looking for, the difference between the calls, right? And the puts, right? So this is a big difference, okay? And not to say that, this is, unusual, guys, because usually you will see that there are more puts than there are calls. Because remember, when it comes to options, people like to do verticals, right? So people like to do verticals and all that kind of stuff. So basically what you have to do is start going through these contracts, and start finding the singles, if any, and start finding the opposing side of the trade. So for example, they're doing a lot of puts. And how many of those are verticals as opposed to single contracts, et cetera, et cetera. And when you see them going in like this, for example, 20 December, right? If you see them going in at different strikes, that's a vertical, guys. Even though it may not say it here, it may not say spread, it's probably a vertical that went in this scenario. So for example, look at these guys here. They bought 3110s and 3110s, puts and calls. So what do you see here, right? They're betting on either side. This thing goes, they're betting on either side, so they could be doing butterflies, they could be doing straddles, they could be doing strangles. And again, once you start going through these and you right click and analyze the trade you can determine what kind of trade this was because you'll be able to see which one actually made the most sense. So when you analyze the trade and you put this in as a buy order and a sell order, you're going to see, okay, well, obviously this looks like the most logical situation to do this play with. So that's how you go about analyzing these, right? So that's how I go about it, looking to see what is the actual sentiment in the market right now. Are people looking for the markets to continue to rally, or is big money expecting the markets to actually fail in the near future? So like I said, I'm starting to load up on the VIX calls, and I'm doing April's. Why? Because, it may not happen at the end of this year. If it does, great, because I'll have a lot of time value added into my calls. But if it doesn't, I have all the way until April for the VIX to come out from its low levels of 10 to 12 and go back to 15, 20, 25, which will give me a pretty hefty, decent profit, right? So looking at the markets, you can see here the Dow broke its key resistance level here, and now it headed higher. Now it's showing some signs of stalling here, and it could potentially continue lower. So obviously this is expected, guys. When things go higher, RSI goes to new levels, it's going to have a pullback. So a pullback is not unusual. It doesn't mean that the market is going to crash overnight tomorrow and we're going to be all the way down here. Like I said in previous videos, and you'll find supporting other videos and articles, it's likely that the administration is going to do everything they can possible to keep these stocks higher and higher, even if they have to wait until next November. Come next November, though, I don't know, guys. All hell may break loose. So we'll see what happens then. But as of right now, the markets are pushing higher. We are getting these pullbacks. But overall, the markets have established some bullishness now. And until they're back below this level here, it may be a while before we get that massive push. But if they do come back to these levels here, guys, it will be nice. Push lower. And everybody should be able to make some profits, some decent profits on that move. In the meantime, play it accordingly. You are trading the right edge of the chart, guys. So, when you're trading the right edge of the chart, regardless of the stock that you're looking at, just make sure that you are being smart about how you're picking your entries, picking your exits. Don't get faked out. If you do get faked out, be ready to go the opposite way. Always plan ahead for whatever may happen. Don't be scared out. Don't say, oh, it'll come back. No, it's not coming back. And even if it does, that if you're feeling uncomfortable with the position, you're either too heavy or you let it get away from you way too far for no reason, when you could have been riding it the other way this whole time because it was clear. Now that you look at the chart, you're like, oh man, this thing broke a key level. So right, we had a key level here. It broke the key level here. For some reason, let's say you were short here because you were like, it's at a key level. It's gonna go low from here. All right, so you entered there. This thing went and closed above it, and now it's closed above it. Why in the world are you still in this position? Now you're letting it run against you. You're being very, very patient with your loser. Oh, it's pulling back. It's coming back my way. Cool. I'm just gonna hold it a little bit longer. The thing is, guys, you don't know how much longer you're going to have to hold. Yeah, it could potentially come back to you, right? But when it comes to trading options, for example, you have a limited time, So time is not on your side, especially if you're buying calls or puts, single calls or puts, right? So now if you're doing vertical spreads, by all means, take your time. Time is on your side. You're putting time on your side unless, obviously, these came in the money for you. So, but when it comes to options, guys, especially, I know a lot of you like to do just single calls and options. Time is not on your side, guys. So it's important for you to exercise good discipline when it comes to your trades, and you need to exercise your discipline in closing out your losers, and locking in your profits. And I've shown people before through previous videos, you don't have to necessarily close your profits by closing the one you bought. So let's say you bought the 2700, 200 strike here, right? You bought some calls, and now this thing is starting to show signs of weakness here that is potentially going to reverse. You don't have to sell that one. You can just lock it in by converting it into a spread. So if you bought a call Now you can sell a different call at a higher price, and then now your profit is locked in no matter what. So if this thing does manage, for whatever reason, manage to reverse, you will actually make more money without having to risk any more money. And in the off chance that it doesn't, and it continues to go your way, guys, your profit is locked in no matter what. So all you're gonna have to do is just close the position or just let it expire. It doesn't really matter. I would close it before it expires, because if they do expire in the money, you are gonna be charged a fee for exercising and assigning the contracts for both sides. So just close it out beforehand and just collect your profits, which basically is already locked in. But that's pretty much it for today, guys. Exercise that discipline, cut your losers, lock in profits, and let's get it.
More money, more money! Ah, it's all very exciting.